If you are starting a new home care agency, someone, a friend, a YouTube guru, or even a generic accountant has probably told you that you need to form an S-Corp immediately to save on taxes. They make it sound like a magic wand, but here is the brutal truth no one tells you about the healthcare industry. If you elect S-Corp status too early in your home care business, you won't save money. In fact, the hidden administrative fees and strict IRA payroll compliance will actually bleed your startup cash flow dry. Today, we are settling the LLC versus S-Corp debate once and for all. Welcome back to the channel. I'm Larry Davis, EA, your Healthcare CFO. After my time in the Marine Corps, I built tax help to protect the profits of healthcare owners just like you. Today, I am going to show you the exact math behind LLCs and S-Corps, the hidden costs they don't warn you about, and the exact magic number your agency needs to hit before you make the switch. Let's start with the basics. When you open your home care agency, you start as a standard LLC. An LLC is fantastic for legal protection. It separates your personal assets from your business liabilities. But the IRS doesn't recognize an LLC for tax purposes. By default, they tax you as a sole proprietorship. This means every single dollar of net profit your agency makes passes straight through to your personal tax return. And here is the painful part. You have to pay a 15.3% self-employment tax on all of it, plus your regular income tax. If your agency profits $100,000, you are writing a check for over $15,000 just for self-employment taxes. That hurts. This is why people love the S-Corp. An S-Corp is just a tax election you apply to your LLC. It allows you to split your profits. You pay yourself a reasonable W-2 salary, and the rest is taken as an owner's draw. You only pay that 15.3% tax on the salary portion, not the draw. It sounds perfect, right? So why shouldn't a new agency do this on day one? Because in the home care industry, your gross revenue isn't your net profit. You have massive overhead paying your caregivers. If you elect S-Corp status, the IRS forces you to run official payroll for yourself. That means paying a payroll provider every month. It means paying state unemployment taxes on yourself. It means filing a completely separate, expensive corporate tax return, the Form 1120S. These hidden costs can easily add up to $2,000 or $3,000 a year. If your new agency is only profiting $20,000 in its first year, the administrative costs of the S-Corp will literally eat your tax savings. You will lose money. The magic number for home care agencies is usually between $40,000 and $50,000 in pure net profit, not gross revenue, net profit. Until you cross that line, stay as a standard LLC. Keep your accounting simple, keep your overhead low, and focus on acquiring clients. Timing the S-Corp election perfectly is the difference between bleeding cash and saving tens of thousands of dollars. You have a very specific window to make this election with the IRS each year, and if you miss it, you are stuck overpaying. Don't guess with your business structure. Let my team run a custom break-even analysis for your home care agency to see exactly when you should flip the S-Corp switch. Click the link in the description to book a free strategy call with me today. We will build a tax structure that actually supports your growth. Subscribe to the channel, hit the bell, and let's get to work.